Hey, welcome to the Airmere Roundtable. Today is the 9th of September, 2020. So welcome everyone. We have Mark Ansel on as our guest, the creator and of Night Owl Advisories. And Mark's been on before, but it's been a while, so we thought it'd be good to update you guys on the Night Owl performance and maybe go through how to read the price array and give you a better idea of how it actually works. Um, so Mark, welcome. Again, it's been a while, but nice to have you back.
Thank you. Thank you for inviting me. Actually, I believe this is my first roundtable at Aramir. The others, I believe, were all at Capital discussions.
Yeah.
In any
Um,
case, I'm happy to be here.
yeah. And before we get too much farther into it, just a normal disclosure, Aramir is not a broker-dealer investment advisor. It's for educational purposes only. Options, futures, and currencies all involve risks and are not suitable for all investors. Past performance is not necessarily indicative of future results. And if you want to read the whole disclosure, just pause the recording or go to the bottom of any of our web pages. So with that, I will stop sharing my screen and you can share your screen now.
Okay.
All right, so now we're looking at your screen, Mark, and yeah, take it away. I'll be on mute, but I'll be here in case there's any questions or whatever.
All right, very good. Uh, I welcome everyone to this class. The purpose of this meeting is to discuss the Night Owl price array, and you're looking at one on your screen. In my nightly emails, I would say by far the most questions I get pertaining to Night Owl have to do with how to interpret the price arrays. What you are looking at now, for those of you who are not current subscribers to Night Owl, this is what you would see every evening, sometime between 6 and 7 p.m. Eastern Time in your email. There's one for Euro, there's one for crude oil, the two markets that Night Owl trades. We're looking at a Euro post from a couple of weeks ago. And I chose this one because we can illustrate a few things with this one. And I've got a couple others that we will look at to illustrate other points that this one does not address. Night Owl, just to give you a little background, Night Owl is a mathematical model, almost entirely manual. For those of you who think it's some program, it's not. It's almost entirely manual, or that is on Excel, that I began developing back in 2011. And the most recent component I have added almost a year ago. We began using it October 1st of last year. And for that reason, and Tom, I'll address this to you as well. For that reason, we're doing this class today to update how to interpret the price array, but also to let you know that some of the information that is in the old Capital discussions videos about Night Owl no longer pertain. So this will bring you current as to how Night Owl now operates and how you as a subscriber would use it. So Night Owl is approximately 9 years old now. Its history at Aramir has been to correctly predict market directions 83.5% of the time as of last night's closes. That's for the two markets combined. It breaks down to about 85.5% for crude oil and 81.5% for Euro. Since October 1st, when the new component went into effect, those numbers are a little bit higher, excuse me. The overall accuracy is at 87.7%, which is roughly 7 calls correct per every 8. So the new component has improved the performance a little bit, but more importantly, what that new component has done is substantially reduce the nightly risk on a Night Owl trade. I will start with this array by attempting to circle at the top. Bear with me, I am not proficient at zoom, so I may be a little clumsy with this. Up here at the top, where I'm circling in purple, you see how Night Owl will tell you each evening where your risk should be. Night Owl measures risk in lines. It measures targets by letters, and you can see the letters A, B, C, and so on for each line, and it measures the risks as the number of lines down from the @ symbols. The @ symbol represents the recommended initial entry that Night Owl will give to us each night. I don't know if I have the information on this post. Let me scroll down if I can. Yes, here. This is the post that I made on the evening of August 20th at 6 o'clock. At that time, Night Owl had no signal for us to trade, and the yellow highlighted portion actually was highlighted in the post. It's not something I've annotated now, but it tells you that there is no signal at present and we are to remain flat. Immediately above that, as I fumble to find my drawing tool again, bear with me, folks. I'm sorry for being not proficient with this software. Well, I'll just go on. Immediately above the yellow highlighted line, you see a line that says last price, gap range, and opening price. I don't have the opening price handy, but it would have been somewhere in between this gap range. And what this tells us is that if market opens at 1800 Eastern Time, inside of this gap range, in other words, between 1854 and 1869.5 in this case, if the opening price is between those two values, then the play below would be valid. Well, there was no play below at the time at 1800, but a little bit later in the evening at 1920, roughly an hour and a half later, Night Owl recognized a short side play. So that's what I have brought back to our screen. And it's recommending that we seek an entry on the two lines that are marked with @ signals. Okay, let me clear the drawing so I can draw again. Well, I thought I was going to draw a circle. Tom, isn't there I mean, there must be a way to just do a freehand draw without choosing like a geometric design.
Yeah, there's that pencil. They should be able to draw a circle with that.
I'm clicking on draw, and it's giving me geometric patterns to choose from.
Oh, maybe click like a square or circle.
Yeah, I guess that's what I'll just use for now.
If you hold the shift key down, it probably makes a circle. Otherwise, it would make an oval. That's how it normally works.
Well, I put a rectangle around the @ line.
Yeah, that looks good.
Okay, so this is how to interpret the @ line. It is recommending an entry at 1870. Now, bear in mind that all of the prices that we see in the array come off of the Square of 9 program that I wrote almost 18 years ago into Excel. And those values are fine, but they are so heavily used by professional traders that I have to strongly advise every Night Owl trader to fade the prices. Fading means that we're going to give the market its due, and rather than seeking an entry at 1870, I will fade it by 2 ticks. In other words, seeking an entry at 1868. And likewise, up above, we see where it has told us to target C, target Charlie, and I will fade my targets also by 2 ticks So instead of seeking 1825, I would be seeking 1827. Sometimes new night owl traders become confused which direction to fade, up or down. Keep it in mind that you're always fading inward. So a fade of the entry price goes toward the target, and a fade of the target price goes toward the entry. So by that, it tells us that the entry fade by 2 ticks would go down because that's in the direction of the target. We're doing a short side play. So it would be 1868, and likewise, we would fade the target C by 2 ticks going upwards to 1827. I'll clear the drawings for a moment to emphasize another point. Up here, as I mentioned a moment ago, it tells you what we are targeting. For purposes here at Aramir, we will either target Bravo or Charlie. The difference is, well, for one thing, Bravo is always closer than Charlie, but to Night Owl, when market reaches target Charlie, Night Owl is done for that session. It has done, market has done what Night Owl foresaw that it would do. Night Owl looks for and predicts for a Charlie length move. And if that move does occur, then Night Owl considers its job done for the day, and either you can take your exit at the target Charlie, or you can trail a stop. I always advise Night Owl traders to trail a stop on at least a portion of their nightly position. I trade 3 lots in each market, and I trail with one of the 3. So I recommend, if you're going to trail, and there's no requirement that you do this, but I do recommend that you do it. If you're going to trail a stop, trail it on 1/3 of your entry position and take the Charlie exit or the Bravo exit, whichever Night Owl recommends, with the remaining contracts. So on this date, August 20th, we were looking for a Charlie length move. And we would seek our initial entry at the faded price of 1868, 2 ticks below the entry here at 1870. Now let's look at the chart and see what happened on that day. I guess I have to clear my drawings to go to the chart. Is that right, Tom?
Yeah, you have to clear the drawings and exit the annotation tool, and then that'll give you control back of the screen to change it.
Okay, there we go. Okay, so this is August either 20th or 21st, forgot which day we were working with. This is the August 21st session with the entry and the post occurring the evening before. Because all the posts, by the way, as to what to do, will occur on the evening before, but they do pertain for the entire Globex session. So we were looking for an entry of 1868. It doesn't look like I have the JavaScript capability when I'm sharing my screen, but I'm pointing at what the opening candle was. And 1868 would have occurred somewhere in here. It's unfortunate I don't have that. Oh, I see, it's over on the right-hand margin, my error. Okay, so 1868 occurs somewhere in this area, and market is initially going against the Night Owl direction, which is typical. Night Owl prefers taking its entries on retracements. In other words, moves against the direction we ultimately want to go. In this case, excuse me, in this case, market actually went all the way up to 1888 before going down as Night Owl foresaw that it would do. So the way we manage that, and here is one of the critical points in Night Owl. Night Owl uses a technique called dynamic targeting. What that means is the following. Night Owl seeks a target Charlie exit. More precisely, it seeks the first target Charlie exit to elect. And that becomes important if market takes a retracement against the night owl at line by at least one additional line. I will bring back the annotation tool here to show you what I mean. So initially we were looking for an entry at 1868, but market retraced by more than 1868 from the opening price. When it got here, it elected the 1873. Remember, it's 2 ticks faded, 1875 minus 2 ticks, 1873. So sometimes traders want to know if they can take that as an entry. My answer to that is, if you're not over trading your account, I do encourage you to do that. Once upon a time, Night Owl used a technique called sashaying, whereby if a secondary line would elect, such as this 1873 as a secondary line to the at line, which is the primary line, an entry at 1873 would seek a target of 1868, 2-tick fade, to then replace the at line. The reason Night Owl stopped doing that was more of a programming issue. At the time I was with Capital Discussions and in Florida with Jim Riggio, one of the former partners of Capital Discussions, and we were working with a programmer who would program Night Owl to automatically adjust its targeting and its stop price when a secondary line would elect and then the sachet exit would elect. That proved to be too difficult of a concept to program. I'm not a programmer, so I cannot really explain why, but we never could find a programmer who could successfully accomplish those changes. So in the sake of simplicity, I simply dropped sashaying from Night Owl trading here on Aramir. I still do it for myself, but if you read in the older Night Owl literature about sashaying, what that is referring to is the election of a secondary line seeking a target A exit based on that entry to then replace the at line entry. Otherwise, when the 1873 elected, and again I emphasize that's a 2-tick fade on the 1875, the new Night Owl target would become this Charlie. This is the dynamic targeting. Before, we were seeking an exit here at 1827 with the 2-tick fade. But with election of 1873, we are now seeking an exit here, a 2-tick fade of 1834. Why do we do this? Because market is moving against us by more than what we foresaw, and we don't want market to get too far away from our target. So we are sacrificing here 6 ticks just to keep us close enough, or as close as what Night Owl foresaw. Because remember, Night Owl foresees a market going a Charlie distance based on the first Charlie that will occur. Sometimes this can result in a lot of effort, and I get complaints about this. You know, why do we have to do this? And you as a new subscriber probably will not like doing this until it saves you. How will it save you? Well, this will not be a good example because we know already from looking at the chart a moment ago, we saw that market went way down. So it definitely went the Night Owl direction. But I have an example coming up here in a moment that will show how this concept of dynamic targeting will save you from a stop out. So for those of you who are wondering why we do this, just have patience. We will get to a very graphic reason as to why we do this. Okay, on this particular day, market initially was going up and it elected the second at line. As we know from looking at that chart a moment ago, of course, we wouldn't have known this in real time, but we know after the fact that market did go up to a high of 1888 as we can see over here on the left. Sorry, I can't point to it. If I try to point to it, it moves. But 1888 happened to be the high for this day. And on our array, you can see that market went against us by several lines. Annotate, draw, square. Okay. So here is actually where market went to. Now, our stop was 2 lines behind the at line. I'm up here on the top. So we count down. Our stop is 2 lines behind the at line. 1, 2. Does that mean we got stopped out? This is a key point. When you have more than 1 at line, as we do in this array, you want to be sure that your stop for the first at line is somewhere behind the second at line. Why? Because if we put the stop in front of the at line, let's say just for the sake of example here, we put a stop at 1879 and the at line is at 1882. If market stops you out at 1879 and then turns around and goes down in the night owl direction, you're on the sidelines. And market is going the way night owl foresaw that it would go. Your best chance when that happens is to take one of these entries in front of the at line, but of course they will be at worse prices. So for that reason, always take care that your stop is somewhere behind the second at line. Now, what do I do? Okay. Our stop needs to be somewhere behind 1882. I'm trading a fairly substantial account for the private equity firm for which I trade. And I am not a person who overtrades. I don't overtrade, and therefore I can take a little bit more risk on a trade. This is Mark Ansel talking now. This is not Night Owl. Night Owl only tells you where it will regard itself as wrong, meaning the stop line. In fading a stop, I will put my stop not only behind the stop line, but I put mine on the line behind the stop line. In this case, the line behind the stop line is 1888, and with a 3-tick fade, it's 1891. That's where my stop is. I did not get stopped out. I had, in this case, I had 2 entries. And again, I'm not overtrading my account. I take three contracts on each entry. So I've got 6 contracts in play now. And I'm seeking, again, the nearest Charlie as my exit. Well, the 1888 line on this day did elect, because remember that was the high of the session, as we now know. Of course, time it would have elected us at 1886 because that's the 2-tick fade. So the target we would have sought in Night Owl would have been a 2-tick fade on 1842, which is 1844. So on this trade, I had 2 entries, one at 1868, the first at line, one at 1880, the second at line, and I'm taking all but 1 contract off at target Charlie, 1844, and I'm trailing a stop on that remaining contract. This particular day turned out to be a day like yesterday was for crude oil. It went substantially in the Night Owl direction, and my single contract that was trailing actually made more than the other 3 that I took off way up here at the 1844 area. So this was a wonderful trade. For my own purposes, I tend to take my exits in the 10 to 11 o'clock area because that's when I have to start homework, and I can't concentrate on homework if I have a live trade. I did not check where my exit was, but given that this was the largest retracement before 10 o'clock, my exit was somewhere in this area. I guess you can't see where I'm pointing. I'm pointing in the 1780 to 85 area.
Yeah, we can see your mouse
You can see
cursor.
my mouse. Okay. Well, anyway, looks like our chart is refreshing. Hopefully it didn't change the date. Anyway, that's where my exit was, in that area. A question sometimes comes up, well, how much should we trail? That's maybe one of the toughest questions to answer. I vary on this because, again, there's no night owl recommendation for this. Night owl took its exit at Target Charlie back up here in the 1840 area, 1844, I think it was. So that's more a question of just general trading principle. Consider that we are doing an intraday swing trade. So you don't want to use a stop that's too tight, because otherwise, how will you decide where to get back in? Because Night Owl won't help you. Night Owl is done. We got to Charlie, Night Owl is done. I tend to use a wide stop because I took off, in this case, 3 of my 4 contracts way back at 1844. And I'm not going to let my winning trade become a loser, but it can go back into the 1860s before it becomes a loser. So I will calculate where my break even is and put my trailing stop just a little bit in front of that. So my trailing stop would have been in the 1850 area on that day, way behind, because most times I'm not going to get that big of a retracement. And if I had just remained in this trade until the end of the day, my exit would have been 1800 instead of where it happened to occur, more like around 1790. So I might have given up 10 ticks on that day, but on other days, certainly market will resume in the Night Owl direction, continue going down, and I will be out too soon. But again, my reason for exiting is a practical one. I have to begin the Night Owl homework for the next day. So my advice is to keep your stops wide. If you need to have a specific value, consider this. Generally speaking, with Euro prices as they are right now in the 18s, a target C move is about 42 ticks. Typically, a target C move in Euro will be between 39 and 45 ticks. So I recommend, if you need to use a trailing stop that is just constantly adjusting as market goes your direction, then use a value in the case of Euro between 39 and 45 ticks. In the case of crude oil, with prices right now around $40, or actually I guess we're a little under, but I'll just say $40, a target C move is about 75 to 80 cents. So use that as a trailing stop. Again, if you need to have a value and just trail as market goes along. That's not how I do it. I just calculate where my break even is. I'll put my stop a little bit in front of that so I don't let a winner become a loser, and just leave it there for the rest of the day. Okay, let me go back for a moment to that example just to see if there was any other point that I wanted to make, because I want to move on to the other examples we have. Because I have specific reasons for bringing up those examples. I will bring your attention down below, and we will cover this more on one of the examples. If you are stopped out, what do you do? Bear with me, let me clear this drawing. And scroll this, well, I guess we're not going to see this whole panel. If you see where I'm pointing, or maybe I can just highlight it, this is what I want us to look at, this line right here. If you're stopped out, what do you do? Well, the simplest thing is to do nothing. Just say, okay, I'm stopped out, I'm done for the day. I don't like ending the day on a loss, and well, who does? But also consider that given Night Owl's extremely high accuracy of predicting direction, 80+%, even if you get stopped out, the likelihood is significant that market will go the Night Owl way and that the stop was simply too tight. So I have this little note every night in the post that tells you if you want to seek a re-entry, seek your re-entry no more than 3 lines beyond wherever market ultimately peaked or troughed, depending on whether it's going up or down. What does that mean? Well, we'll go back to here. Remember, we had 2 stops. Whatever the values were, I never can remember numbers. The first stop was at 1882, and I told you that in my case, I always put my stop behind the line behind the stop line. Mine was at 1891, 3 ticks beyond this line. But if you're not trading a big account, and please don't overtrade your accounts, but the Night Owl recommendation is 3 to 5 ticks on a stop line. Okay, well, if you had followed that and you had put your stop 5 ticks behind, you would have had a stop at 1887. Well, market went up to 1888. That's, of course, the most frustrating thing. But what do you do? Well, of course, like I said, you can do nothing and just lick your wounds and wait till tomorrow. But given that Night Owl is over 80% accurate in predicting direction, why not take advantage of that fact and seek an entry to try to gain what you can back? In this case, market peaked at 1888. I look at this on a 20-minute chart, by the way. That's how I determine where my peaks are. So it means I have to wait for 20 minutes, but I'm also allowing 2 to 3 lines of movement. And typically market's not going to move that far in 20 minutes. So market peaked at 1888. 2 lines in front would be 1875. 3 lines in front would be the at line, in this case, 1870. So if you get stopped out following a stop loss election, seek your re-entry no more than 3 lines in front of the extreme price. That's what it says over there to the right. There, over here. Nuts. Technology frustrates me. As Tom knows, I'm always complaining about technology. Okay, following a stop loss election, seek your re-entry no more than 3 lines in front of the most extreme price. Well, the most extreme price, 1888. 3 lines in front is 1870. 2 lines, if you're a little more aggressive, 1875. Take your entry on one of those 2. Do not fade. I do not fade stop entries. I only fade limit entries. So your entry would either be 1875 or 1870, depending on whether you're more aggressive or a little more cautious. And your target C is going to be this. Because remember, Night Owl is done at the first target C to elect. If you want to trail a stop, and I strongly advise that you do, you will pick up the bulk of this move, even if you enter on a stop. Because after all, the stop entry was right here at 1870 on this day, and it came all the way down. So you would have gotten most of that move anyway on your trailing contract. We had a similar issue yesterday with crude oil, and I'll get to that towards the end of the lesson. Okay, so that was the other point I wanted to make on that example. Every night, I post in a forum a recap of the trade. This is the session we just looked at, the August 21st session in Euro currency, as it's headlined in the forum. And it gives you the history. It tells you, well, we were looking for this at line. These are the secondary lines to have elected. In this case, there was a second at line election, and there was no stop out, because again, I do advise you, if you can bear the risk, to put your stop behind the line, behind the stop line. Again, that's not Night Owl, that's just Mark Ansel, because I like to give a trade as much breathing room as I can. And ultimately, we got to the 1844, which was the target C delivery, and Night Owl was done. By the way, that's the meaning of delivery. Delivery simply means the market has delivered to Night Owl what Night Owl expected it would do. It got to a target C. Okay, down below, I put a couple additional notes if they pertain. I advise taking additional entry at the tilled line, if you want to follow one of W.D. Gann's ideas that add to a trade as it's going in your direction. The tilled line in this case was here at 1853. And that can become your trailing contract if you wish. I don't do that. I'm not comfortable in giving up that much, but it's there, and you can certainly use it for that purpose. The other note down at the bottom, this one I do utilize in my own trading. Consider taking an entry either on the stop loss line or the line in front. I do both. What does that mean? Okay, in this case, we only had two lines between the at and the stop, which happened to be the second at, two lines behind. In this case, not always, but in this case, because remember it tells us up here how many lines behind. So what that little note meant was not only consider taking your entry at the at line, but take an entry either on the line in front of the stop line, which in this case, the line in front of the stop was 1875, or take an entry on the stop line itself, which is 1882. Why do I do this? Because the reward to risk is so big. My stop, bear in mind, I'm using a stop that's farther behind than what most of you are going to do. My stop is at 1891, but I'm still taking an entry at 1880. I'm only risking 11 ticks to go from 80 to 39. I'm risking 11 ticks to make whatever that is, 41 ticks. A 4-to-1 reward to risk ratio. Why not take that entry? Because you're going to get it many times. Because again, keep in mind that night owl statistic. It gets the direction right 80% of the time, 80+% of the time. We're at 87% since October 1. So take advantage of a low risk trade like that. I encourage you to do this if your account can bear it. Again, I don't want anybody over trading their accounts, but if you're trading $100,000, take a 3-lot entry at the at line and put an additional contract on at each of the lines in front of the stop line. And you still only have 5 contracts in play, and you're not carrying a lot of risk on those last 2 entries. So that's my advice. Again, that's not a night owl rule. That's just a concept of trading that I follow. We've got to move on, so we'll move to the next example. I'm going to have to peek ahead at the notes if I can to remember why I chose this example. Oh, this is an election of the tilled line. Okay, that was the reason. Here is the array. Market traded to 1749. That's where it closed at 5 o'clock in the evening. Here was our gap range. If market opens between 1736 and 1782, Night Owl will take the entry, or will seek the entry, I should say, at the faded at line, which is 1754. 1756 square of 9 price minus 2 ticks. It's a short play again. And again, remember, when you're fading entries and targets, the fade goes in the direction of each other, goes inward. So you fade your entry towards your target, and you fade your target towards your entry. So 1754 is in the direction of the target. The faded, well, in this case, we're seeking target Bravo. So the faded target Bravo would be 1731. Okay, what happens? I have to look at the chart because I don't remember what happened. This is about a month ago. Let's see. We were looking for 1754, so market must not have gotten up there before it went the night owl direction. What's this high here? Am I on the right day? I may have pulled up the wrong chart. I guess I pulled up the wrong chart because the purpose of this example was to show the tilt line. Market did not get to our 1754 before it started going down. What do you do in that case? Well, you can either just let it go, or you can seek the tilde line as your entry. I do advise using the tilde as an entry in this case, because otherwise, and I keep mentioning this, but I cannot emphasize this enough. Night owl gets the direction right so often, 5 times out of 6 minimally on the average, that take advantage of an entry. Don't just let the train pull away from the platform and stay on the sideline. Get something out of it. So in this case, on that particular day, market only elected this 1748, as I recall. I know it didn't elect the 1756 or the 54. So we'll just assume here in our lesson that it went up to the 1748, but that was not an entry that Night Owl was seeking. At the time it hit 1748, we could not have known that it was not going to go to 1754. So we were holding out for 1754. We didn't get it. Market starts to go down. Well, now you're in the noise. You could say, well, should I enter 2 lines in front? You could. You could enter at 1745, but there's still a reasonably good chance market will go back and elect your 1754 anyway. So I instead use a tilde. Usually the tilde is 3 lines in front of the at. In this case, it happened to be 4, so it wasn't all that great of an entry, but still, I recognized the tilde line in my own trading, took my entry at 1733. What am I targeting? Well, we're supposed to target only Bravo on this day. And so the first Bravo that we'll elect will come off of this line, because in our example, market went up to 1748. So Bravo is 1724. So on this day, I'm only getting 9 ticks, but hey, it's still 9 ticks. I got something out of it. And that's basically how I look at it. And again, I'm trailing a contract. This was yesterday's crude oil trade. Market did not elect the at line. It did elect the tilde, of course, because you're doing this on an OCO basis when you put this into your platform. Either you're selling the 1754 or you're selling the 1733, whichever one elects first. And in this example we're looking at, in yesterday's case, I don't remember the numbers, but the at line never elected. The faded at line never elected. The tilde line, of course, did elect. Because it's going to be one or the other. The tilde line elected. So at the time of the election, I'm thinking, I got a tilde line entry. I'm not happy about that. I prefer my at line entries. But by the end of the day, I was all smiles, because that was a $3 plus trade yesterday on crude oil, on that trailing contract. Just the trailing contract made more than $2,500 by the time I took my exit. So I guess the moral of that story is, don't bemoan an entry on the tilde line, because sometimes you're going to be glad that you took it. And yesterday was one of those days in crude oil. But that was the point of this lesson. Notice we had 3 at lines. None of them elected. So the tilde line at least got us something. In each case, the stop was 2 lines behind. But bear in mind, I'll go over this again. Bear in mind, here's the stop line. But you don't want your stop to be in front of an at line. Don't ever put a stop in front of an at line, because the worst thing would be if you put your 3 ticks on this 67, you've got to stop at 70. What if 72 doesn't elect? Now you're flat, or you're taking an entry at the tilde, or you've got just something that's not as favorable as if you had simply put your stop behind this at line. Don't ever put a stop in front of an at line. Put it behind. So in this case, my advice would be, at a minimum, put your stop 3 ticks behind. So you'd have one at 1775. And then for this at line, 3 ticks, a correction. For this at line, your stop is what? 2 behind. Okay, so 1, 2. But you don't want it in front of an at, so put it behind the at 1793. The third one, there's no more at lines, so you could do 3 ticks, 1805, although mine would have been 1810. because like I said, I always put my stop behind the line, behind the stop line. Okay, that was the point of this lesson, was to show the tilde and also what to do with multiple at lines. Sometimes people ask me, well, which at line should I play? The best answer I can give to you is, if you're trading a small account, you don't want to burn up your capital. The safest thing to do is to play the farthest away at line, because after all, the stop for the farthest away at line obviously will also be the stop that's farthest away, and therefore that's the stop least likely to elect. And if it does elect, if Night Owl really blew that call and market went through 3 at lines and hit the ultimate stop, if you've only played 1 at line, you haven't lost very much money. Of course, the other side of that coin is, if you're only playing the farthest away at line, that's also the least likely line to elect of the 3 at lines. So you may end up being on the sideline or taking a tilde entry, when those of us who are playing all the at lines have a better entry. So you really have to consider it based on your own tolerance for risk and reward. If you're trading a small account, you're pretty much limited to a more cautious approach of playing the farther away at lines. I do know of a trader, a fellow in Thailand, who told me he only plays the farthest away at line because he has observed that when I put multiple at lines out there, invariably the ones behind elect. I don't have statistics on that to refute that or confirm that. I haven't tracked that kind of statistic, but he has, and he says that in his own trading, if there are multiple at lines, he always uses the farther one. There rarely are 3, but there very often are 2. And in the case of the 2, he says he always plays the second one, and that works for him. So it's really a personal decision. By the way, I'm going to take a second here just to make a comment. There is no right way to do this. I mean, you've got all these lines that are potential entries. You've got targets beyond Charlie. There's nothing that says you can't target delta or even target echo. You know, again, if you're an aggressive trader and you like to go for home runs, well, you know what the square of 9 prices are. Market will get to target delta more than 35% of the time. About 3 times out of 8, market will go to a target delta. So, and just because it doesn't get the target delta doesn't mean it stops out. It may only get to Charlie. And taking a Charlie exit on a day when you were seeking delta, what's wrong with that? You still came up with a good trade. If it didn't get to delta, you could do it this way. If you're targeting delta, when market gets to Charlie and you're trailing a stop, put your stop at Bravo. Just trail a stop that way, two targets behind. That's another way to do it. My point is, with these price arrays, there's an unlimited numbers of ways you can do this. I'm only advising one way. I can't say that my way is the best way. It's just the way I do it. You'll find what you're most comfortable with. Like the fellow in Thailand, multiple at lines, he plays the second one, not the first. Everybody modifies this to suit their own tolerance for risk and reward. Eventually, if you're a new Night Owl subscriber, you'll find what you're most comfortable with. Don't feel that you have to do it the way I do it to be right, because there is no one right way to do it. Okay, I'll get off that soapbox and we'll move on to the last example, which is a crude oil example. And let me, again, peek ahead to see what the notes are telling me so I can remember what we were doing here. This is the example that shows why we use dynamic targeting, because that's probably the #1 complaint I hear, because it requires us to work. Here we have an example. This is the only post for the day. Okay, so we have multiple at lines. The stop is 4 lines behind each. What this means, by the way, because I don't think I mentioned this before, the stop for the first at line is 4 lines behind the first. The stop for the second at line is 4 lines behind the second, and so on. Stop for the third at line is 4 lines behind the third. It doesn't mean, I mean, it would be quite aggressive for you to use the initial at line and use one stop that's based on the third outline. Sure, you could, like I just said, there's infinite numbers of ways you can do things. And by taking a trade like that, where you're taking the initial outline but using the stop of the third outline, clearly you've got the most risk that there is based on the array, but that third outline stop is the one that's least likely to get hit. So you've got a very strong likelihood market will go your way if you can tolerate that kind of risk. That's actually what Night Owl used to do before October of last year. We didn't have multiple outlines, but the standard risk before October of last year was to put the stop 8 lines behind the outline. That was just like an automatic thing. The stop was always 8 lines behind the outline. The reason I made the change in October of last year is during the summer of 2019, I did a lot of research using previous points of control in market profile and came up with an algorithm to use that would help me identify which of those POCs would make the best stops. So those stops created less risk for us on our trades. In fact, reduced the reward to risk ratio, cut it in half, cut the risk in half on our trades, thereby doubling the reward to risk ratio. So it was one of my favorite discoveries. Now, I won't say it is my favorite, but it's one of my favorite discoveries in developing Night Owl, is how to use those previous POCs to identify a stop line. That's where these stops come from. They're all based on previous POCs. Now, nobody put words in my mouth. I did not say that the stop 4 lines behind, 1, 2, 3, 4. I did not say that the POC was 42.35. I said the stop is based on a previous POC. So the previous POC is going to be actually somewhere in front of 42.35. I'm not going to go into what the algorithm is because that's proprietary to Night Owl. Just as a Night Owl trader, know that our stop, which is now much closer than the old 8-line stop, is not likely to get hit and is allowing us to take a trade with half the risk we used to take prior to October of last year. Okay, in this case, we are working with an array that has multiple at lines. And this was a day where we are targeting Charlie. I don't think I did adjust the stop, or correction, I adjusted the target. Every once in a while, you'll see a message come through like this, basically telling you that we are adjusting the target from Charlie to Bravo, or it might go the other way from Bravo to Charlie, although we haven't had one of those lately. But typically I will adjust a target based on the Night Owl recommendation that, hey, Night Owl sees declining volatility. It's possible we're on the wrong side. So let's at least get to a Bravo, and then again, if you're trailing your contract, fine. Take your other contracts off at Bravo rather than Charlie. I'm looking down below. I see that this was the day of the OPEC meeting. I remember this. Crude oil was just going sideways from the afternoon the previous day through the night. It just wasn't doing anything. And therefore, the volatility measurement that Night Owl uses dried up. And we went from the original recommendation of seeking target Charlie to target Bravo. So what happened? The outline elects, I hope I've got the right chart for this one. Let's see, this is August 17th. We were seeking 42.77. It looks like all the charts. Yeah, this is our chart. Okay, good. We were looking for 42.77, which, as I recall, is, let me see. $42.77, so that would be $42.83 on crude oil. 2-tick fade. By the way, fades on crude oil are based on QM, 5 cents. So 42.72 or 77 half would become 42.82 half. I round up to 42.83. Again, I'm giving my trade the best chance for election rather than rounding down to 42.82. I do the opposite at the target. I want to be sure I get my profit. And so my profit at the time for Charlie would have been 43.57. 2 ticks, 2 QM ticks would be 43.57.5, and my target would be 43.57. Okay, so anyway, we were looking initially for an entry of 42.83, a 2-tick fade on this price. I don't know if it occurred here. No, it looks like it occurred here. And at the time, we're still seeking a Charlie exit. Market went up some, and then it drops like a rock. And Night Owl says, uh-oh, we might be on the wrong side of this. Let's seek a Bravo and get out. Why not just take the exit? I mean, if we think we're on the wrong side, why not just take the exit? That's a philosophical thing. I have observed in all the years I researched Night Owl, and Night Owl's development covered a period of more than 8 years of full-time study by me. It was the only thing I did for 8 years was develop Night Owl. Even when you're on the wrong side of a market, sometime during that session, there is a greater than 60% likelihood that market will go in the opposite direction, a Bravo distance. That's why Bravo is the minimum target on Night Owl. So even though Night Owl realized that we might be on the wrong side when we get this big drop like we did here, and it adjusted the target from Charlie to Bravo, we'll still seek a Bravo exit. Well, this is the reason we do the dynamic targeting. On that big drop, look at all the prices that elected. How far down did that drop go? Down to 42.40. So look at all the lines that elected just in that one drop. You know, we already were in the at line, but these lines all elected within a matter of a few minutes. 42.40 happened to be the low, and that also happened to be the MIT entry for this line. I realize, by the way, some of you don't have MIT on your platform. If you don't, just add an extra tick. So you would have been looking for 42.42 half if you're playing QM, 42.43 for CL. I was looking for 42.40 because I can do an MIT on my platform. 42.40 happened to be the low of that session, so I bought the low, but we came and I bought it because, again, it's the line in front of the, stop line. And I buy on the line in front and the stop line itself. And again, my stop is behind the 42.12 by 3 ticks, so 42.05 would have been my stop. So I'm buying 42.40 with a 35-cent risk. But even if you don't buy it, I'm not saying you have to buy it, but even if you don't buy it, it still adjusts the target to here, because that's the closest Bravo. So if you only elected to take the at line and nothing else, you would have longed 42.43, and you're seeking a 2-tick fade here, 42.43. At least you're coming out of it break even. That would have been your worst case scenario. You're coming out of this break even though market made this big move against us. Well, here's the moral of the story. We took an exit at 42.43. How high did the market go? Let me see, 42.43. Maybe I picked the wrong day. Oh, we did get to 42.43. 42.43 is, or correction, 83. I keep saying 43. Anyway, the target Bravo's in this area. So we got there. But what about the original target? This is why we do dynamic targeting. The original target, 43.25, we never got there. It went up to 43.20 and came back down. This is what I meant a few minutes ago when I said, you will hate dynamic targeting until it saves you. And this time it saved us because we got out at 42.80. We came out of it with a profit. Market never got to the original target. So if you don't adjust your targets by dynamic targeting, you are at fairly high risk of getting stopped out. Because there are days when Night Owl is wrong. And even if your stop is behind this line, in other words, the line behind the stop line, if Night Owl is wrong and you get stopped out because you didn't do dynamic targeting, you will kick yourself, because that was the Night Owl exit and market never got to the original target. That's the point of this lesson. You will hate dynamic targeting until it saves you, and then you'll think it's the greatest thing. I have heard that over and over and over from Night Owl traders over the years, that they love the dynamic targeting when it saves them. Okay, so we have covered how to interpret a price array of Night Owl. I don't know if I have the ability to see questions, so I will.
There aren't any questions, and we're the only ones left. So I think we probably need to wrap it up. Maybe just remind people the promotion if somebody's watching the recording. I'll put it in the description too.
All right. Well, if you are watching the recording, then if you have any questions about anything I've covered, you can write to me. I am on nightowl@aramir.com. Send me your questions, and I will be happy to answer them for you. I thank you for your attention and wish you a good trading.
Oh, and before you go, we do have a Labor Day special that we're continuing the pricing of. So the pricing is better than it was in the past. So if you are interested, you don't have to make a huge commitment up front. I think it's $99 for the first month, and then you can make a decision if it's right for you to have a longer term, bigger discount subscription.
That's right. And my present intention is to keep those prices in effect through this coming weekend. That would be until midnight Eastern time on the 14th, August 14th.
Sounds good, Mark.
Correction, September 14th.
September, yeah.
September 14th, yes. Okay. Thank you all. Wish you good trading.
All right.